Stephanie Murphy for Let's Talk Bitcoin. I'm at the Inside Bitcoin's New York City conference, and I just finished a panel titled Bitcoin, Remittances, and the Developing World. Now, on that panel, we talked about a number of Bitcoin issues related to the so-called other 6 billion, including micro-lending. And there was a gentleman that introduced himself to me at the end of the conference saying that he was working on Bitcoin lending. Not necessarily micro-lending, but we'll find out a little bit more about that in a moment. I want to welcome Jack Kiernan to the podcast. Hi, Jack.
Hello. Thank you for having me.
So you're interested in Bitcoin lending. You don't really differentiate between micro and, macro lending?
Make no distinction. And I think the beauty of the Bitcoin protocol will allow, many borrowers to borrow from a single lender or many lenders to borrow from a single entity. So the idea of sizing those transactions within a nomenclature, I don't think is fair.
Right, it's kind of arbitrary what's micro and what's macro anyway.
Micro on whose level? A government or an individual? So I think the Bitcoin itself, or I keep referring to just Bitcoin, I want to say any cryptocurrency, really allows that close to zero transaction cost. And by virtue of that, you are able to facilitate these transactions from a micro, for lack of a better word, micro transactions to macro transactions.
Yeah, if anything, I would say that the distinction between micro and macro, whether you're talking about micro loans or micro payments, to me, a micro transaction is something where the typical transaction fees could seriously interfere with that amount, or they're a significant percentage of that amount. So if you're talking about a micro payment, it's pretty much not feasible to pay for a 25-cent newspaper article on the web on a website with a credit card, because the credit card would want to take 3% plus 25 cents or something like that, and then your whole payment's gone. So I would consider that a micro payment that would be enabled by Bitcoin. And the same thing with loans, right? If you're trying to send $100 by Western Union from the U.S. to India, you might expect to pay a fee of somewhere around $10 to $20, and that's going to really cut into the amount of that payment. So, what do you think about that?
I think the cost prohibitive nature of current state transactions on the internet are the exact problem cryptocurrency seeks to solve. So I think the idea of a payment network where these zero cost transactions are encouraged, it should be that we're all striving towards. I think the 3% market we spoke of, 3 to 5%, depending on what credit card you're using and then what protocol you're using to send that money. They've been making a lot of money for a very long time, and it's really to the detriment of those who need the money and the undervalued currency.
Now, some people say that those fees, especially when we're talking about microlending or sending money across global borders, political borders, a lot of people say that most of the cost actually comes from complying with regulations, and it's government-imposed costs. It's not the cost of actually moving the money itself. What do you think about that?
I think that is a very political answer given to you from motivated individuals. I think with a banking background, I've seen the infrastructure of banks from both a technology, governance, and compliance standpoint. I think there's a large mechanism in place that is really just not efficient by any means. And what Bitcoin allows is that trust-free transaction, the trustless transaction, whereas if you go to a financial institution, whether it's Chase or Citi or whoever, there's an inherent trust implied in that transaction. You're trusting that the organization is run efficiently, that the architecture is correct and accurate, that your transmission of funds is accurate and done correctly. These are all
just trust us. Yeah.
Yeah. These are all the concerns that come with being a big bank. The idea of Bitcoin averts all of those problems at the architectural level. I think compliance and regulatory issues is and should be a big part of what goes on. I don't think to function in anonymity is the answer, but I don't think overburdensome compliance is the answer either. I think there's a happy mix, and I think some of the ideas that came out today on that panel were spot on, insofar as, let things kind of happen and then move from there.
So what would you say is a happy mix of regulation and compliance versus a burdensome one? Because it seems like that's an arbitrary point depending on who you ask, right?
I do, and I think it's the perspective you take when reviewing these transactions. So if you review them from a front-to-back type way, so, okay, I onboard the customer, I know who you are, and then you're now permitted to do these sort of transactions. I think what the cryptocurrency infrastructure allows you to do is trace that money backwards. So if you see a consistent payment structure where a single account is receiving money time and time again from a variety of networks, okay, maybe we should investigate this. So rather than look from the minutia up, take the big picture down and say, okay, here's the main flows, here's where the majority of money is going, and really look at it piecemeal. Say, okay, here's a big chunk, here's another big chunk. Does this make sense? Does this fall within the confines of the law? And if not, then let's investigate. And that's the point at which I think the intrusion should occur, not preemptively.
Okay, so tell me about your background and tell me about your idea that you're working on related to Bitcoin lending.
My background, out of school, I became a floor trader at the NYMEX. I was trading oil, gas, natural gas. And then Bush in 2006 mandated the renewable fuel standard, which called for ethanol to be blended in gasoline. I then began doing a transportation type arbitrage with the ethanol, because you can't pipeline ethanol. It has to be taken by truck, a barge, a rail, because they lubricate all the petroleum pipes with water. Alcohol and water don't mix. So I learned how to program in order to facilitate this payment.
Alcohol and water don't mix? But isn't that like every mixed drink that there is? I mean...
Well, the alcohol and water combine, whereas petroleum and water don't.
Oh, I see. Okay, so you don't want it to mix.
You do not want it to mix.
Okay.
All right. So the problem with ethanol has always been the logistics. So that said, I learned how to program. And then that curious nature that you just kind of saw, when I learned about Bitcoin, was just excited. I started building mining equipment because it interested me, and it became a trading game for me. Nearer term, in the present, I've kind of been traveling to as many of these conferences as I can, kind of getting an idea of the landscape, and have really not seen an opportunity for those who are long Bitcoin to invest them for interest. So I'm looking to bring a vehicle by which those who are long Bitcoin the opportunity to gain interest, as well as offer needed capital to those throughout the United States.
Okay, and so you were saying off the air that what you want to do is kind of facilitate Bitcoin lending that uses real-world data to determine credit worthiness and stuff like that, such as credit scores and if it's a company, perhaps their bond rating or something like that. Is that correct?
That's correct. I think there's other, from an individual perspective, we have 3 credit scores, right? So as part of our AML, anti-money laundering and know your customer rule set, we're asking for credit scores as well. So if you want to borrow money on our network, you're going to make available to us, your credit rating within, the structured society, so we know, how trustworthy are you.
Well, there are some major issues with credit ratings. I actually just watched a video about this a couple days ago, but basically, what these companies want is for you to be in debt, and so if you don't borrow money, then your credit score can get dinged, and it can change in a day based on certain factors. They have information in there that they're not supposed to be tracking, like if you live in a, quote, high minority area, which, they may be able to infer your race or something, and that could affect your credit score and the interest rates that you get offered in certain loans. I guess what I'm asking here is, why use the credit score when it's so flawed? Why not just come up with something totally new to determine someone's creditworthiness? And this also ignores like other parts of the world where people don't have credit. They don't have a credit score because they have never been able to access credit. So this is just, it's certain people in the U.S. How is it different than the current system, and why is that good to use the current system?
I think I made the distinction of being in the United States first and foremost, because that's, where we choose to operate to be in. I think the model is extensible across the globe, but I know that, given legislation and the culture right now, it's needed to be done in a single, domiciled location. Now, you bring up inherent flaws with credit rating systems, of course. And I think the idea of introducing a new credit type rating to an already new system is bringing too much to one point at one time. I think, as with any system, there's inherent flaws. And this just gives us a basis from which to work. Really, the credit score is the basis from which to work, because down the road, through using the platform, there's a score associated with your usage of my platform. So we'll move away from the traditional credit score, but in lieu of that, known quantity of your ability to repay, I'm going to use the credit score as an indication to investors that this person is worthy of my money.
Mm-hmm. And so investors would give money to your firm, and then people would receive loans and then pay them back in Bitcoin, in dollars, and what?
Interesting question. And no, we would never take ownership of the actual coin.
It's just a brokerage thing?
Brokerage, yeah. So we're back to backing the trade. Now, it depends what the final client is looking for, whether that be cryptocurrency or dollar. I think of most benefit to us would be obviously transferring to dollar and giving them the American dollar. But I think allowing for both is kind of the ideal state.
You're familiar with Ripple, is that right?
Of course, yeah.
Okay. So, I mean, it sounds like what you're doing is kind of similar to Ripple, but more in the system, more you're going to interface with the credit ratings. And why would someone use a service like yours instead of just going sort of a more decentralized route like Ripple?
I think Ripple is an amazing technology and really, really well thought out, but it doesn't use the Bitcoin, right? So we're leveraging what exists.
But you can borrow Bitcoins on Ripple.
You can. But I think most people, the Ripple network versus the Bitcoin network are two separate entities, right? So those who are Bitcoin fanatics and those long Bitcoin are going to want to stay true to that Bitcoin route. And by all means, I mean to expand to every type of cryptocurrency, that I can back to the dollar. But I think Ripple is its own network unto itself, and I want to leverage again the Bitcoin network for this type transaction.
How would a loan made in Bitcoin be administered, and would your organization have any role in doing that, like making sure that someone is sending Bitcoin payments to a certain address at a certain time and paying back some amount of the loan every month or whatever?
So that's part of the infrastructure of the platform. The actual loan initiated on the platform, in order to send money or offer money to a potential borrower, the money needs to be sitting in escrow. So that's just a sign to us that this lender is for real, and I'm not going to play games at the 12th hour to make sure I get the payment. Likewise, the repayment structure is automated within the platform. I think we're allowing repayment in both coin and dollars. Again, there's a fee associated with the dollar transaction, but it'll be scheduled and done via our interface. Repayments.
Okay, and who is the escrow? Is it a fourth party?
I think it probably should be a fourth party, so that we're not, culpable for any loss. There's, players in the space right now that are offering that sort of service. Circle Financial being one of them. Who else offers the service? Bitstamp, I think, offers the service. So there's a couple different ways to do this. I just don't want to, have that not liability, but skew to my position by holding someone's Bitcoin.
And with something like this, where at least some of the lending is made in Bitcoin some of the time, do you expect to be able to offer people better interest rates? Like, is that how you're going to bring them in?
Yes. I think the idea is we'll charge what the market will bear from a lending perspective. But remember, these guys that are long, or anyone long Bitcoin right now, has no opportunity to get even an incremental jump. You'd have to go purchase more. I think the opportunity to gain just a slight amount of interest, especially given its deflationary nature, is what any investor is looking for. So if I'm long, 100,000 or let's say 10,000 Bitcoin, and I want to allocate some of my portfolio to a more risky, endeavor to get more Bitcoin, I think it's just sensible investment.
Are people going to be collateralizing these loans? Are they going to be putting up collateral?
I think collateralized loans is the next step to all of this. I think I'd rather have an unsecured type lending basis to begin, because when you start, and this comes into the colored coin realm, when you start attaching assets to a coin or a portion of coins, it's a whole new evolution in terms of the business scope. So initially, no, I think we're going to stick with unsecured.
And, I mean, what kind of customers do you envision having? Like companies who are taking out loans to, finance a startup venture, or like individuals paying their mortgages, or individuals paying $1,000 for some computer that they can't afford right away? Who are your customers? I think anyone who needs to borrow money is really our customer. And the idea of the platform is that it's scalable. From the very small, I need to buy a computer type scenario, to the broader, I need to make my mortgage payment. Can you take your mortgage payment out in Bitcoin? You probably could, but that's years from now. Who knows how long. But I think it's extensible then to the level of municipal lending. So if I'm a municipality that needs to build a bridge, a road, and I need $100 million, it's obviously onerous to have that process done. I have to go to a bank. I have to get it underwritten. I have to go, and that costs a lot of money. Instead, listen, here's the community at large using the interface.
$10, $10, $10, $10 adds up pretty quick. Oh, the 100 million is going to take a while, but you follow what I'm saying. It's the many lenders to one borrower.
So you are actually looking at the potential for small lenders to get involved in this and earn a return on their Bitcoins potentially.
Correct, yeah. I think from the smallest to the largest, but my target market is those more sophisticated investors. I'm hesitant to say high net worth or accredited. Given the average age is 32.7 of a Bitcoin holder and 96% male, the target market is someone mid-30s to 40s, long Bitcoin, unhappy with an interest-free return.
Great. Okay. Well, is there anything else you want to add? Are you looking for feedback, investors, or is there a place where people can go online to find out more?
Not yet.
Okay. Not yet. Cool. Thank you. Thank you, Jack, for your time today. It's been interesting talking to you about this.
Thank you. Pleasure to meet you.